You know, we're kind of, in my opinion, in a transition market. And what do I mean by that? I feel like we're moving from a seller's market to more of a buyer's market. So we're transitioning between the two. So with the increase in interest rates, we're seeing properties sit on the market a little longer, which means sellers are going to have to get more aggressive, and they're going to have to make more concessions with offers in some situations. Buyers aren't fully in the driver's seat. It's not a complete buyer's market, but we're transitioning between the two. And I think that we're going to see that for the next few months unless interest rates start to drop. But if the inventory stays tight, which they have right now, there's not going to be a big dip in prices because there's still strong buyer interest. And with very few properties on the market and the inventory being tight, there's just not a lot to choose from. So we've actually got a longer list of buyers and we've got properties to sell them. Now, if we start seeing an influx and an uptick in those properties hitting the market, and now we flood the market with new property listings, now buyers are going to be taking over, they're going to be in control, and sellers are going to have to get really aggressive. So if I was selling property today, I would think about being a little more aggressive in my pricing strategy. We can still walk away with the same money, but we want to look more competitive than other properties on the market. And if I'm a buyer, I talk about patience. Patience for finding the right property that fits your profile and what you want, and patience in making sure you're making that solid investment. But the property will hit the market that you're looking for at some point. Just hold your powder dry and don't make a rush decision and get into a property you're not happy with.